Warren Buffett owns 42 stocks worth $276 billion in his stock portfolio at Berkshire Hathaway. On top of this, he's sitting on a cash pile of $348 billion. In today's video, we're covering the top 15 stocks in Berkshire's portfolio that are likely Buffett buys, including the stocks that he's still buying today, even when he's not finding that many deals in the market. The first stock on our list, number 15, is Constellation Brands, ticker symbol STZ. Constellation Brands is the $33 billion alcoholic beverage distributor, which includes brands like Modelo and Corona, making up the majority of its sales. Today, the stock trades just $23 above its 52-week low. Buffett was buying this stock in the fourth quarter of 2024, and then it fell off a cliff in 2025. Even still, he's still buying with an average purchase price of $208 per share. Just one other super investor owns Constellation Brands, and that's the Hillman Value Fund with a 2.7% position. They just bought that this quarter. Also in January of 2025, there was a small open market insider buy by one of their directors. While the company has added on debt and they don't earn great returns on capital, Buffett likely likes the steady cash flow and the fact that they've grown a little bit over time. Another plus is that Constellation is a dividend growth stock. Today, they pay a 2.2% dividend yield to shareholders, and they've been buying back shares since the pandemic, bringing this to a 3.6% shareholder yield overall. With strong brands in Mexican beer, Constellation's priced well below their median price to sales, but today they're ahead of their projected cash flows. Still, after their stock price fell off a cliff, their GF value still comes in at $265 per share. That's up 30% from today's stock price and gives them a significantly undervalued rating. Analysts and their cash flows are also pricing in around a 22 to 23% upside. As Buffett announced that he's stepping down as Berkshire's CEO at the end of 2025, there's a lot of uncertainty with Berkshire's portfolio. But there are two other investment managers at Berkshire in addition to Buffett. Ted Weschler and Todd Combs, who's also the CEO of Geico, both manage around $30 billion combined. They make up most of the small positions in Berkshire's portfolio. Buffett's next positions are truly a basket bet. These are his 5 holdings in the Sogo Sosha, Japan's trading houses, that he's been very public about over the last few years. These positions include stocks 10 through 14 and together add up to $24 billion. Investments in Marubeni, Sumitomo, Mitsui, Itochu, and Mitsubishi makes up stocks 14 through 10. Together, these are around a 24% position, and Buffett through Berkshire Hathaway owns around a 10% stake in each company. He's bought these stocks by issuing yen-denominated debt. Then he's invested in the companies and used the huge spread between their earnings and what he has to pay on interest, basically to pocket free money. Charlie Munger, before he passed away, compared these positions to God opening up a chest and just pouring money into it. Not only that, but these companies are similar to Berkshire in both form and structure. They're Japan's version of conglomerates. And just this past week, Greg Abel, the CEO incumbent of Berkshire Hathaway, was in Japan visiting and meeting with these managements to understand what opportunities Berkshire has internationally.
Yeah, when you think of the 5, there's definitely a couple meetings a year, Warren. And I think the thing we're building with the five companies is, one, it's been a very good investment, but we are really, as Warren touched on, we envision holding the investment for 50 years or forever. But I think we also are building relationships to do incremental things with each of those companies. And we really do hope to do big things with them globally. They bring different perspectives and different opportunities, and we see, and that's why we're building that long-term relationship with them.
You can think of these as one solid position. These were Buffett's handiwork. Fun fact is that Buffett got the idea to invest in these companies after reading through the Japan Company Handbook, and he started buying into them in August of 2019, first disclosing them in August of 2020, actually on his birthday. Warren Buffett remains one of the most iconic figures in global finance. Known as the Oracle of Omaha, he's the CEO and chairman of Berkshire Hathaway, which he's stepping down from CEO as at the end of 2025. Berkshire is a multinational conglomerate with holdings spanning insurance, energy, transportation, and consumer goods. Buffett, at age 94, is widely admired for his disciplined, long-term value investing approach and his philanthropic commitment, having pledged to give away the majority of his wealth, 99.5%, through the Giving Pledge. His influence continues to shape generations of investors and leaders worldwide. Stock number 9 that Buffett likely bought himself is Chubb Limited, ticker symbol CB. Chubb is one of the largest property and casualty insurers in the United States, but they have international operations spanning 54 countries, and they operate in P&C insurance, reinsurance, and life insurance. They're the product of Ace acquiring Chubb and then assuming the Chubb name in the first quarter of 2016. Today, the company is a $115 billion market cap, and they trade just $30 above their 52-week low. Chubb was a stock Buffett hid while he was initially buying, increasing his stake along the way. He first bought into the stock in the third quarter of 2023 and then bought for 4 quarters in a row. Recently, though, he slowed his position, and overall he has an average buy price of $221 per share. So he's up around 30% on his holding. Chubb is owned by 5 super investors overall, and this is led by Buffett, both as a percent of his portfolio and overall investment in the company. Besides a growing business with strong cash flows and solid returns on capital, the big attractor for Buffett was definitely its underwriting. Chubb has underwritten at a profit every year going back to 2020. Their combined ratio dropped from 96% that year to just 87% today. That's a great underwriting performance. And remember, in insurance, writing under a 100% combined ratio equals an underwriting profit. Buffett loves this. Their valuations also look attractive compared to the past. The company is more profitable today, being priced well under their projected free cash flows and even their Peter Lynch value, but they're priced right at their median price to sales. Another plus for Chubb is that they're a dividend aristocrat, growing their dividends 33 years in a row and today paying a 1.4% dividend yield to shareholders. However, they just have a $278 GF value, as it looks like analysts are expecting a slight downturn in the P&C industry before this upticks again. Stock number 8 is another one that's been in the headlines recently. This is Kraft Heinz, ticker symbol KHC. Kraft Heinz is the result of the merger between Kraft and Heinz, facilitated by 3G Capital and supported financially by Buffett and Berkshire Hathaway. Today, Kraft Heinz, the food and consumer packaged goods company, is a $31 billion market cap, and it trades at its 52-week low. Buffett has an average buy price around $75 for this stock. He's publicly admitted that they overpaid for the Kraft part of the business. Heinz is a wonderful company. Kraft is owned by 7 super investors, and as a percentage of his portfolio, this is a 5.5% holding for Prem Watsa, who's been called the Canadian Warren Buffett. He even added to Kraft slightly in the last quarter. Altogether, Berkshire owns 27.5% of Kraft Heinz. There were some headlines recently that the 2 directors who represent Berkshire on Kraft's board of directors were stepping down. This potentially gives Berkshire more flexibility if they want to either dispose of part or all of their position. Charlie Munger has said for a long time that consumer foods companies are going to have a more difficult future than they had in the past, and this certainly seems to be the case with this business. Kraft has been reviewing strategic alternatives for some of its business units, including Oscar Mayer. They could also be looking at strategic alternatives for the entire business, with the possibility of combining with another food giant. Regardless of the rumors, Kraft's numbers look like they're in a better spot today than they were pre-pandemic. The company still has strong cash flows, and they've reduced their debt even though they're still highly levered. One potential plus to call out here as common shareholders is that Kraft is paying a 6% dividend yield to shareholders right now, and they're buying back around 2% of their shares. This gives them a very high 8% shareholder yield overall. That's perhaps the highest since they've been back as a publicly traded business. The valuations for this company also look very cheap, with them being priced well below their median price to sales and at less than half of their projected cash flows. Their stock has taken a bit of a nosedive recently, and all of this contributes to the company being perhaps moderately to significantly undervalued, with a GF value of $35 per share. Stock number 7 has been a long-time holding for Buffett. This is Moody's Corporation, ticker symbol MCO. Moody's is one of just 3 credit rating agencies in the United States, along with its peers S&P and Fitch. Buffett bought into Moody's in the early 2000s after it was spun off from Dun & Bradstreet. Since then, it's been a staple in his portfolio, although he did trim it slightly during the global financial crisis. Overall, Berkshire owns around 14% of Moody's. Today, 14 super investors own the company, and this is led by Chris Hone and Valley Forge Capital Management, as well as Chuck Akre. They all have double-digit percentages of their portfolios in the stock. While just a 4.4% holding for Buffett, he's the biggest shareholder on a dollar basis by far, with an $11.5 billion holding. Moody's has an $85 billion market cap, and it trades in the middle of its 52-week range. There are few businesses in American capitalism that have as enviable a position as Moody's. Operating in an oligopoly and having huge amounts of pricing power, Moody's has been a long-term compounder for decades. They post solidly growing earnings, sales, and free cash flows. However, one thing to note is that their returns on capital have dropped in recent years. The quality of Moody's business has also been very well appreciated by the market, where today they trade significantly above where they've traded in the past. Still, there's little doubt that this is a wonderful company, and that's why their GF value comes in at $461 per share, which is pretty close to their current stock price. And to top it all off, Moody's is a dividend growth stock, growing their dividends 10 years in a row and paying a modest 0.8% dividend yield to shareholders today. Stock number 6 on our list is another stock that Buffett's been buying in the last quarter. In fact, he's been buying this stock for the better half of 3 years. This is Occidental Petroleum, ticker symbol OXY. It's a $13 billion holding for Berkshire, and they own 27% of their common shares outstanding. With warrants to buy more shares, this stretches up to 35%, and they've been approved to buy up to half of the company. The oil and gas giant is a $40 billion market cap, and it trades just $5 above their 52-week low. Buffett's been buying pretty much since the second half of 2022. He has an average buy price of $54 a share, and as their stock has come down in recent quarters, he hasn't been buying as much, just nibbling here or there. 7 super investors own this stock overall. It's a big 16% position from Prem Watsa at Fairfax Financial. Interestingly, here we see Li Lu, who Charlie Munger called the Chinese Warren Buffett, also show up with 3% of his US-listed assets in the business. Overall, though, it's just a very small holding for him. Occidental looks pretty attractive compared to their sales and their projected cash flows. Their valuation doesn't seem that onerous, with them just trading $13 above their tangible book. As a commodity business, though, this is going to trade pretty in tandem with the price of oil. That's part of the reason why they crashed hard in 2020, and it's part of why they're crashing today. Still, though, it looks like their GF value comes in at $53 a share, which is up 22% from what they're currently priced at, and it's around where Buffett was making most of his buys in the business. And to top things off, Occidental has been paying an increasing dividend for 3 years. Right now, they have a 2.3% dividend yield to shareholders. Stock number 5 that's been a personal Buffett buy is Chevron Corporation, ticker symbol CVX. 5 super investors own this today, and it's led by Buffett with a 7.7% holding in his US-listed assets. Chevron is the $238 billion integrated oil, gas, and energy giant. Today, it trades just $3 above its 52-week low. Buffett first bought into Chevron at the end of 2020. Then he proceeded to buy or sell the stock in the next 14 quarters in a row. Most recently, he was slightly trimming his position, but he hasn't touched the stock for almost a year. Buffett has an average buy price of around $127 a share, which is pretty close to where Chevron trades today. This was largely seen as an investment in the future of oil, and Chevron's trading below their median price to sales and well below their projected cash flows today. Their GF value comes in at $156 a share, which is up 12% from what their stock price is today, although analysts are largely expecting the value of Chevron to be flat going forward. One thing I want to call out here is that even with the price of oil going negative in parts of 2020, Chevron has consistently produced positive cash flows. That is a great thing for this business. As an added bonus, Chevron's paying a huge 5% dividend yield on top of being a dividend growth stock. They're a dividend aristocrat, growing their dividends 38 years in a row. And in addition to all of this, they bought back 4% of their shares outstanding last year alone. This all adds up to a huge 9% shareholder yield overall. Stock number 4 in Buffett's portfolio is one that he's been trimming recently and that he didn't list as one of the cornerstones of his portfolio in his most recent letter to shareholders. This is Bank of America, ticker symbol BAC. The $325 billion banking giant today trades $4 below its 52-week high. Buffett through Berkshire is Bank of America's largest shareholder by far, with a $27 billion current value on their holding. Overall, he has an average buy price of around $26 a share, so he was making a pretty penny when he trimmed in 2024. In the latest quarter, Buffett slightly reduced Bank of America stock, and now it's under that 10% ownership threshold where we're not going to see reports on what he does going forward. Together, 15 super investors own the company, and as a percentage of the portfolio, this is led by Li Lu. Buffett has largely trimmed some of his financial holdings in the last few quarters in the last year overall. Bank of America has not been an exception, with them now trading above their median price to sales and just below their gram number. That all aligns with the GF value of only $40 a share, which is down $3 from today's stock price. And what do you know? The companies that Buffett loves to invest in love to grow their dividends. This is more a symptom than a cause, but Bank of America has grown dividends 10 years in a row and currently pay 2.4% yield to shareholders. The third stock in Buffett's portfolio is probably the most iconic. That's Coca-Cola. The $309 billion consumer soft drinks company is trading just $1 below its 52-week and all-time high. By sheer size alone, Berkshire is by far the largest shareholder in Coke. They have a $28.5 billion holding that makes up 11% of their U.S. portfolio. There are 6 super investors invested in Coca-Cola. Buffett first bought Coke back in the late 80s and added to it in the early 90s. Then he called it one of his inevitables and hasn't touched it since. Today, Coca-Cola trades slightly ahead of their median price to sales, and they're way ahead of their projected cash flows. They have really strong numbers, but they haven't beat the market for quite a while. This is because the quality of Coca-Cola has been largely priced in with an above-market multiple since the late 90s. The companies that Buffett loves love to grow their dividends. Coca-Cola is a dividend king, growing their dividends 63 years in a row and today paying a 2.8% shareholder yield. They're one of the most reliable dividend companies out there, and from Buffett's original buy, he gets 50% of his cost basis every year in Coca-Cola dividends alone. The second stock in Buffett's portfolio is another one of his inevitables, and it's one of the few financial companies he's holding strong to. It's American Express, ticker symbol AXP. Today, American Express is a $200 billion market cap that trades in the middle of its 52-week range. A long-term compounder throughout its history, Buffett has actually had a couple of stints as an investor in the company. Berkshire's position today dates back to the early 1990s, and now they own more than 20% of the business. While there have been some stints in the company's history where they've definitely been undervalued, today it looks like they're priced above their median sales and their earnings, though they're still falling below their projected cash flows. The beauty of American Express is that they have a very special place in the mind of most consumers. They earn really high returns on capital because of this, and they generate a lot of free cash flow. They're putting most of these cash flows back into shareholders' pockets. They've repurchased shares steadily for more than a decade, and they paid big dividends over this time as well. Today, though, it looks like the company's fully priced with a GF value of only $246 per share. That might take a few years of growth to catch up to today's prices. 10 super investors own American Express, and this is led by Guy Spear, who has 19% of his Aquamarine Capital portfolio invested in the stock. Amazingly, after all these years, American Express is still 16% of Buffett's U.S.-listed portfolio, and it's a $41 billion holding. Buffett's largest stock is no surprise to people who keep tabs on him, but what he's been doing with it recently has been. Apple is the $2.9 trillion technology consumer company that's now trading just $23 above their 52-week low, down more than $60 from their all-time high. After aggressively buying Apple in the late 2010s, Buffett briefly sold in 2020 and then added to it again 4 quarters in a row between 2022 and 2023. Altogether, he has an average purchase price of just $40 a share. So when he trimmed in all 4 quarters of 2024, he was making between 4.5 and 5 times profit on his holding. What's interesting is that the stock climbed even higher to start 2025, but he held on. It looks like Buffett's reduced his holding to an even 300 million shares, and that's where he wants to keep it, at least for now. Apple is owned by 17 super investors, and dollar for dollar, Buffett's by far the biggest with a $68 billion holding. This still makes up 26% of his U.S. portfolio. Duong Yangping has the highest percentage of his portfolio, clocking in at a staggering 63%. It's no surprise that Apple's been one of the top performing stocks in history with their storied products like the Mac, the iPod, and more recently the iPhone. Today, however, they're trading at more than 30 times earnings, and there's been hardly, if any, growth in the company recently. This means they're trading way above where they've been at historically. When you look at Apple's numbers, there's very little not to love. The only thing is that their sales growth has stalled in the last couple of years. And usually Buffett's favorite thing is that they've been returning a ton of capital to shareholders. However, in the case of Apple, they've been buying back a lot of shares as the company's trading at some pretty high valuations. This may not be the best thing for shareholders, as it could ultimately destroy value. Apple's a wonderful business. Buffett even gave Tim Cook a shout out at this year's Berkshire Hathaway meeting, saying that Tim Cook has made more money for Berkshire shareholders than Buffett has. which in absolute terms is probably true. With very few tech investments, dollar for dollar, Buffett's been one of the most successful tech investors of all time. And like most other Buffett stocks, Apple is also a dividend growth stock. Right now, they're paying a small 0.53% dividend yield to shareholders, but with those share buybacks, they still have a 3% shareholder yield overall. So Warren Buffett's portfolio is a testament to his enduring investment philosophy of patience, discipline, and value. From iconic blue chip stocks to strategic long-term holdings, each position reflects Buffett's sharp eye for quality and his unwavering belief in the fundamentals of their numbers. As the market evolves, his portfolio remains the benchmark for investors looking for wisdom in simplicity and conviction. If you enjoyed this look at Buffett's portfolio, be sure to like the video, subscribe to the channel for more, and share it with friends who might enjoy. Click the bell to be notified every time a new video is released. Thanks for watching and have a great day.